Hey everybody, it's Ian Beamer with Guaranteed Rate. Hope everybody's doing well. Hope everybody's staying healthy. Uh, it's cold outside, but it's also November, so it's supposed to do that. A week ago, we were kind of spoiled by temperatures up in the 70s. I believe that's gone now and probably gone for a while. Nonetheless, fall is here, winter's coming. Let's get into the world of mortgages. So last Thursday, for those of you that were paying attention, we got some consumer price index numbers out showing us the rates of inflation on various goods, food, energy prices, gasoline, transportation, etc. So the rate of inflation is slowing down some. So most economists were predicting consumer price index to show inflation numbers of about 7.9%. We actually came in a little bit below that to 7.7%, which is down from 8.2% the month before. So we peaked around 9.1% in June. We seem to be trending downwards. This is a good sign. This is a sign that the Fed's interest rate hikes are taking an effect. They're doing what they're supposed to do. Obviously, we've got a lot of work to do. The Fed's goal for inflation is to get inflation down to about 2% annually. So obviously a lot of work to do, but we're trending the right direction. We haven't been down in the 7.7 range since January of this year. So it's been about 10 months. Certainly a good sign. We're moving in the right direction. We're making progress. This is good. With that news of the consumer price index, those of you that were paying attention, the Dow went up about 800 points last Thursday. Mortgage rates did dip down slightly. I don't think interest rates are going to be corrected overnight. That's not going to happen. We still have another Fed meeting coming in December. We'll pay attention to unemployment numbers. There's a lot of things to watch over the next few months. I don't think interest rates are going to drop drastically, but I don't think we're going to spike drastically either. So we'll probably get some mixed reports over the next few months into early 2023, and then we'll just pay attention to everything: consumer price index, inflation numbers, unemployment rates, obviously the Fed's news, the Dow, mortgage-backed securities, bond markets, etc. So we'll pay attention to that. We had some major announcements by a number of companies nationwide. Meta, the parent company for Facebook, Peloton, Disney. Apparently Elon Musk's new venture at Twitter is not going over really well. So a lot of companies are announcing some major job cuts. So this is going to, I would think, have some effect on our unemployment numbers, which were up last month. We were at 3.5% in September, 3.7% in October. So we'll see what the November numbers look like. But unemployment numbers, I would think, are trending upwards. And unemployment was one of the things kind of fighting off the recession. So if we have low unemployment, that kind of keeps a recession at bay. But if unemployment does pick up a bit, it's one of the key signs that we are indeed headed towards a recession. So Wall Street Journal took a poll. They take a poll every month. They're up to 63% of their economists believe that we'll see a recession in the next 12 months. So what does that mean? What does that mean for you? What does that mean for mortgage rates? Generally speaking, it should help. It should help mortgage rates. Obviously, one of the downsides of a recession, like we just talked about, is higher unemployment, but it should get interest rates down a little bit. So I would have to think the rates in the sevens, at least for the 30-year fix for now, are temporary. These are going to be short term. We'll keep an eye on those moving forward, but I would think a recession would mean lower interest rates whenever that recession does come. As far as house pricing, we've seen some markets in the U.S. If you've heard about this, possibly in the news, possibly on the internet, Reno, Nevada is leading. I don't know what to say, leading or trailing, but they have the highest rate of depreciation in the country currently. They're down about 13% from April of this year. So that's making headlines. A lot of people are paying attention to that. A lot of people are talking about that. Oh no, the bottom's falling out of the market. There are certainly markets that are showing record depreciation, large numbers in appreciation. Again, Reno, Nevada is being the largest, but a lot of these markets also saw ridiculous appreciation immediately preceding this fall. So while Reno, Nevada is down 13% since April, they were up about 35% from the previous April. So they had appreciated close to 35% in 12 months. Obviously, that's not sustainable. Some of these other markets that are showing 10, 12% drop in prices, average home prices, also saw record numbers, crazy numbers as far as appreciation immediately preceding these numbers. So take that with a grain of salt. In the Midwest, we seem to be a more stable market, knock on wood. We do not have the extremes that a lot of Florida's, California's, even some areas of the Midwest with lake houses. We saw a lot of lake houses shoot up in value with COVID. People couldn't get into hotels, couldn't get into, couldn't really travel. So they wanted to go to a lake house. A lot of Airbnbs, a lot of VRBOs did very, very well in COVID. And a lot of those properties are not doing as well. They're starting to come on the market now. So generally speaking, in the Chicagoland market, we're still showing appreciation. It's slowed down quite a bit. I think the October numbers are around 6% year over year up. So certainly up is a good sign. I would expect those numbers to level off. So I would expect it to come down from 6%. I don't think the market is falling. Bottom's going to fall out of this market. But every market's different. So talk to your realtor, talk to a professional in your area about your specific situation. The condo market's much different than the single family home market. Multifamily market is a different market. If you're looking to do short-term rentals like we just talked about, that is a different market. And certainly price ranges have quite an effect. So typically lower priced homes, entry-level homes do a little bit better as far as market slowing down than higher priced homes. So just something to pay attention to. Lastly, I will leave you with, because interest rates are up currently and because a lot of people might expect interest rates to come down in the future, my recommendation to those of you that are in the market currently, and this I think this is a decent time to enter the market. Again, don't expect crazy appreciation over the next year or so, but that will be back. But if you are in the market currently, don't let the 7% scare you, or even mid sixes, high sixes scare you as far as a 30-year fixed. I would perhaps look at a shorter term loan for those of you with great credit or decent down payment. Possibly an ARM product may work. We've got extremely aggressive ARM products. Please let me know if that's something you'd be interested in, but there's no point in locking in a rate for 30 years if you're going to refinance in a year or two. Your other option would be maybe a temporary buy down. We've talked about those in the past as well. You could do those with as little as 3% down. Give me a call. I'd be happy to talk about it. But the thing that I want to leave you with, my first number one priority tip is, if you can avoid them, and sometimes they are unavoidable, if you can avoid paying points, that's something you're going to want to do. Avoid paying at least permanent points. The temporary buy down points, those are refundable. We've talked about that. But permanent points, if you can avoid them, I would try to avoid them, because I think you'll have an opportunity to refinance at some point in the near future. So I hope everybody's doing well. Happy Thanksgiving, everybody. Thanks for checking out my video. I will talk to you all very soon. For those of you in Cook County, pay attention, because I believe your property tax bills are coming out very soon. So they should be available online in the next couple of days, and then they'll be, I believe, mailed out in the next couple of weeks. So happy Thanksgiving, everybody. Stay warm, and I will look forward to hearing back from you soon. Have a great day.